Good morning. This is Tom Alexander. It is Sunday, October 6th. It is about 9:34 a.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekend update with the stock indices that I do every week. If you're finding me for the first time, you can find additional updates. You can find this one as well as others by going to my website, alexandertrading.com. Look under weekend updates. And you can get the charts from this, a PDF. You can get this recording as well as previous weekends. If you find value in this, please subscribe, please like, very much appreciate it. Okay, we are coming out of a mind-numbing over 2-week grind where we've really gone net nowhere, with the exception of the last hour and a half on Friday. That has the potential to be the beginning of an initiative break to the upside, i.e. a trend. So we'll take a look at the charts here and relevant levels as we head into next week. Okay, let's just take them one by one. SPX, and the levels you see highlighted on the screen are the important levels. As those of you that know, those of you that don't know, I should say, I don't use magic numbers. I only use trade activity. I use price action through the lens of auction market principles. It's a very, very specific defining characteristic of price activity. So the bottom line here is that you can see we had this ramp on Friday, and most of which occurred late in the day. But we've been in this mind-numbing chop up and down, day to day, intraday for 2 weeks, 2 trading weeks. The most critical downside level now to the downside, this 5,700 level should hold. It should not be taken out, and we should see prices above 57.67 very soon, probably Monday if this is a real breakout. And all the indices were pretty much in sync. This is the NDX on Friday, which is something you look for. Now, the NDX has been lagging, but the parameters here, the levels that you see on the screen are relevant. Look at the Dow. The Dow had a new all-time high close on Friday. These are print highs, but I would expect to see, if I'm correct, that this is an initiative break to the upside. We're going to see new all-time print highs probably on Monday. The Russell, excuse me. Now, the Russell, as you are well aware, sort of does its own thing, but here are the relevant levels in the Russell, and then the New York Composite, which is a very broad index. It also closed at a new all-time high. So everything looks technically sound. We're making new all-time highs in breadth. The broadest indices are making new all-time highs. The indices are generally moving in the same direction, even though there is disparity among the indices in terms of their relative position relative to all-time highs or important multi-year highs in the case of the Russell. Okay, if we look at the internals of the market, something I noted, and I put this in the report, we had the 10-day moving average. Now, what you see here, just a brief reminder for those of you that may be finding this for the first time, the red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of NYSE advancing issues. The histogram is net breadth. Now, a couple of observations about what the information on the screen. Breadth has been in a very narrow range, reflective of the uncertainty over the past 2 weeks of trade. Now, maybe it's beginning to pick up. The other thing I'll note is that the 10-day moving average of breadth over the past 10 days has contracted rather sharply relative to the relatively benign retracement that occurred during this period. The last time we got down to this level in the 10-day moving average, the SPX was down about over 4.3%. This time it's less than half of that. What does that mean? I don't know. But I would give the benefit of the doubt to the upside of this market as long as Friday's lows hold. Now, another piece of the information that is a little bit vexing at the moment is VIX, the volatility index, and it remains somewhat elevated. If this is a true initiative break to the upside, I expect VIX next week to drop like a stone and test this 1465 level or even trade below it. We haven't been able to get below this 1465 level since this spike up in early August. So, I mentioned at that time maybe there's a higher floor. The floor appears to be around this 1465 level, so we'll see. But if I'm right and this is an initiative break higher, you're probably going to see something in the area of this 1465 or lower. Now, I want to show the profile view of this, which gives a very, very good view of market condition. And that's what the profile graph was designed to do. It was designed to show market condition, the market condition of the auction. Now, this is the 9/19 through 10/3 auction, 11. I think this is 10 trade days. This would be the 11th trade day. Now you can see this is Friday's trade. This little red arrow here, right here where my cursor is, that's where this market closed on Friday. This is Friday's low. You can see we traded through the high volume node of the larger degree auction on Friday. We're testing the upper extreme of this profile unit of this particular auction. So this appears to be the beginning stages of an initiative break. We may find out in Globex if that's the case. Regardless, the bottom line for next week is that the market is bullish as long as Friday's lows hold. Guys, I hope you enjoy the rest of your weekend. I'll speak with you again soon.